I'm Priscilla Barrera with the Investing News Network, and here with me today is Simon Morse, who's CEO of Benchmark Mineral Intelligence. Simon, thank you so much for joining me today.
Thank you very much, Priscilla. It's great to be back.
Yes, that's right. The last time we were here in person at Benchmark Mineral Week was 3 years ago, and the world is definitely now a different place. I wanted to start by asking you, when you look at the lithium-ion battery industry, how big do you think this space can really become?
Yeah, that is the trillion-dollar question, multi-trillion-dollar question, really. I mean, you can look at it from the perspective of where we are today. So let's kind of explore that a bit. 600 gigawatt hours this year, just over. When Priscilla, you started in this industry and I started Benchmark roughly the same time, we were at 50 gigawatt hours a year. So we've grown an order of magnitude in that time period. But the question is, what's firstly going to happen in the next 10 years? But I'm trying to think about what's happening beyond 10 years, maybe 20 years, 30 years, for two reasons. One, we are in the 30th year of the lithium-ion battery, the commercial stage lithium-ion battery, when Sony did the Walkman. That was 1992. We're 30 years in, and it's trying to predict the next sort of 20 to 30, which will be, well, lithium-ion batteries are getting better with the chemistries that are coming through. They're getting cheaper and they're becoming abundant. So there's these three things that are driving this, what I think is the mega trend of our times, forward. The second part is I like looking at it from a 20 to 30 year time horizon, because it takes 10 years to build and finance a lithium mine, a graphite mine, a cobalt mine, and so on. Mining industry and mining investors think generally in 10-year horizons. And so how big can the whole thing become? Well, we're going from 600 gigawatt hours to 6,000 in the next decade. Now, whether we actually reach that order of magnitude depends on how quickly we can bring on raw materials. But then once you're at the 3, 4, 5, 6,000 gigawatt hours, or 3, 4, 5 terawatt hours, well then, in many ways, sky's the limit. If A, the technology is getting better, B, it's low cost and stable low cost, and there's no other massive competitors that can commercially scale to the same level. And I don't think there will be. And I think all the other battery technologies are going to be really important, but they're going to be really important in the 10%, not the 90%. And so how big can the lithium-ion battery industry become? We're looking at now to 2050, really you're going to anywhere between 15 and 20 terawatt hours. You need to get that amount of batteries into the system to become net zero. Whether we can scale the supply chain to meet that amount of batteries, or whether we get close, and we will get close, whether we actually reach that full amount, we'll only know in 30 years' time. But it sounds like a mega long time horizon, but this is the things I've been thinking about at the moment.
Obviously, when you put that into numbers, it's easy to see that the supply of battery raw materials, critical minerals in general, will be a constraint in coming years. But it's not only a matter of how much and how fast we can get there, it is also about the quality of that supply. And I wanted to ask you if you could talk about how that plays a role, and would you say is this a factor that is underestimated?
Yeah, I mean, I've always called these critical minerals specialty minerals, specialty chemicals. Really, you can say now if these kind of elements are going from the niche to the mainstream, you can kind of say maybe they're specialty commodities. A simplification in specification in order to scale is needed, but at the same time, it's not iron ore. You're not digging it out of the ground and selling it to pretty much a vast variety of people that of steel makers, let's say. Iron ore, phosphate, potash, all these really big commodity things are a mining and a logistics play, which is another reason why all these big commodity houses, all the big miners, BHP Billiton, Anglo American, Rio Tinto, Encore, they think in logistics, they think in big mining. To access this battery boom, you have to think in like a chemist. And the quality of, say, lithium or graphite that ends up in your EV starts at the mine, right? All these mines are different. It's not. I think mining gets a a bad rep now and again, or let's say an unfair rep of it's a non-specialist digging stuff out the ground game. It's quite the opposite, right? It's heavily technical. Speak to any geo, any mine manager. The quality begins by understanding your deposit, understanding then how to process it, primary processing, secondary, sending it into where the chemical guys are, and then that feeds through to the quality of your EV. So really, if you're making EVs, you have to understand the quality of your raw materials at the mine level. If you don't, then you're going to have some shocks down the line.
All right. And one of the trends we've seen in battery metals is obviously prices taking a turn since 2020, in particular for lithium. Are you at Benchmark forecasting prices to remain at these high levels? And what risks do you see in the long term if they remain so high?
Yeah, so prices have gone, upwards of $80,000 a ton within China. Our weighted global average for lithium carbonate or LCE lithium carbonate is in and around $69,000 a ton. Incredible numbers, right? That's like, we remember the days when it's people were hoping for $12,000 a ton, and they were knocking around $7,000. Now at those high prices, everything's in play. So actually, they're almost. Let's say prices. It's not for me to say prices are going to ever be too high. It's a function of supply and demand. But when prices are that high and everything's in play, then it's almost the other end of the spectrum. How do new investors work out what the best assets are, right? If everything is economic. It used to be economics that, allowed them to do that filtering process. But so where are prices going? I mean, I have to speak to the forecast, interview Andy Miller and ask what Andy Miller says and his forecasting team. I mean, my philosophy always is that the price curve to date has rocketed up and it's remained high and fluctuating. It hasn't crashed back down. It's not like rare earths was in 2010. Look at the rare earths price curve. It crashed within a 12, 14-month period after rocketing in a 6-month period, probably less. With lithium, it's rocketed up. It kind of paused a bit. It carried on up. And it's paused even longer now at those really high levels. And that's a sign of proper demand-driven price curve, whereas rare earths back in the day was China stopped exports to Japan, right? It was a supply shock. So prices, high prices won't last forever. They can't, you can still make batteries and EVs now at the high lithium prices, right? So it's just pushed the lithium-ion battery price up by 10 to 15%, along with a few other raw materials. But sustain lithium, if you're buying lithium, you should be targeting anywhere between, if you can keep lithium's price between $30 and $40 a ton for the next 3 years, you're doing a good job. So even though prices are at 80, if I'm not saying that's our forecast is, you can get those numbers from Andy, but what I'm saying is between $30 and $40 a ton, as a buyer, you're doing a good job. And that shows you that we're in a completely different world for lithium.
Yeah. We obviously saw these high raw material prices have an impact on electric vehicle makers, which continue to look for a secure and sustainable supply. We've seen OEMs' involvement in the mining side. Do you expect that to continue? And will we see them try to take further control of their supply chains, going further into the midstream maybe?
Yeah, if you're an OEM, you have to take control of your supply chain, right? Because, you've seen that firstly with the battery building gigafactories in joint venture with generally Korean manufacturers outside of China certainly, and then you've seen like General Motors now looking at building cathode plants, there's anode plants. So you're slowly making your way upstream. A lot of deals have been done with sort of development stage junior mining. Call it development stage is probably a fairer term to help bring through this next generation of mining companies. But a lot of them are very weak deals, right? They're needed deals, like a lot of guarantees of loans if they meet certain requirements. The reality is these companies, these developers need hard cash to get this thing up and running and to bring in other institutional investors. The OEMs need, if the OEMs don't own the physical assets, they're not going to have guaranteed supply, because paper contracts, no matter what deals you've got, what relationships you've got. We're going into such a aggressive period towards the back end of the decade that those paper contracts won't mean anything. If you own the lithium mine, own graphite, own cobalt, own cathodes and anodes, in some way, whether it's 25%, whether it's 51%, whatever, that's the only way you're going to guarantee to make electric vehicles in what will be between 2028 onwards. It will be the most aggressive scramble for EV, mineral, petty days for oil assets. Because if you don't own the assets, you're not guaranteed to make EVs.
And looking at the other side of things, and the junior miners and that are trying to develop these assets that we need, what do you see as the biggest challenge for them going forward?
Money, right? Like money and permitting, they're the two things. I think funding has happened, but it's not happening still at the rate that anyone needs. Institutional money is still not as aggressive as it should be. And then, if they get the money or they get some money to take it to let's say the permitting stage, then permitting's a massive hurdle. That can add 50% of the time onto building and establishing the mine, even with everything clear. So they're the two biggest hurdles, and that's where government should really step in to actually try and clear some of that for these guys.
All right, so let's talk a little bit about what governments have been doing this past year. We saw just recently the Canadian government ask Chinese companies to divest from 3 critical mineral companies. What were your initial thoughts when you heard the news? And is this the beginning of more aggressive Western government action when it comes to critical minerals?
Yeah, the Canadian government stepping in to make legitimate investors divest, right? Fascinating from a geopolitical perspective, quite shocking. And I don't mean shocking in a negative way necessarily, and I mean that in a neutral way, I didn't expect that kind of news way, because I was trying to think of when I've seen this action from a government, aggressive action from a government ever in critical minerals. And it only reminds me of the rare earths situation that we had in 2010-11, where the government stepped in and blocked exports to Japan because of that fishing boat vessel thing. It reminded me of that. Something like you expect maybe the Chinese government to do something like this, not the Canadian government. Maybe you expect the US government to do something like this, with considering where the geopolitics are with the US versus China at the moment, the trade war and so on. But Canada, very interesting, and it shows you how the lithium-ion battery is at the center of global geopolitics, and that's all I have to say on that.
All right, and I also wanted to ask you about the US, because obviously Canada and the US are allies. And we've seen the US sign the Inflation Reduction Act into law this year. I wanted to get your thoughts on how you think the IRA will impact the junior mining space. And maybe how do you think the US will reconcile this fact that some of its domestic sources of lithium might be developed by companies backed by China or in partnerships with Asian companies? Do you see them taking steps similar to Canada?
Yeah, for the US, I think... I don't know. The US could do anything right now, right? The amount of detail that the Inflation Reduction Act went into, specifically for lithium-ion batteries, is incredible. I rewind back to February 2021 when this American Jobs Act came out, which is the Inflation Reduction Act Part 1, if you like, before Joe Manchin steered it in the direction that we've got. They mentioned lithium-ion batteries. That's a first. Not talking about EVs, talking about batteries. And then they're talking about batteries and critical minerals and building the supply chain domestically. So that's a major step forward. In terms of whether the US could do what Canada's done, I mean, for sure, it's getting that political. And the fact that every region in the world and every major economy will need to have their own... If they want to be in EVs, they'll need to be making batteries. If they want security of supply of the supply chain, they'll need to be making the cathodes and anodes. If they want to actually not have empty cathode and anode plants, they need the raw materials. So every region in the world at the moment is reliant on a global supply chain, apart from China. And if you move into going into the 2030s, you'll have the global supply chain, then you'll have to have a regional one. So I think for now the US needs to be focused on just getting its own mines up and running, before it can actually throw out any investors. I think the US needs as much help as it can get on that. But yeah, it's certainly one to watch. And the fact that Canada has done it from the top, the White House for sure has already stepped in on this stuff. So the White House stepped in on SK Innovation versus LG Chem, right? The two Korean battery makers, and it allowed SK Innovation to stay in the country. The White House can step in again on critical minerals. So,
and how do you think all this geopolitical environment could impact lithium producers? Could this be an opportunity for them in the long term?
Yeah, definitely. I think when geopolitics starts meddling with the real world, again, anything can happen. It's hard to know. I mean, the biggest impact you can make on the lithium industry or any other critical minerals is the government putting money in to make it happen. And I don't think it's such against US culture of this free market concept that you can't say the US is going to, what do you want them to do? Spend, give you $2 billion to get a mine up and running and refinery. I'm not sure they'd do that, but actually, would the US start putting, their own money from certain funds and certain divisions into it? They already have done with the DOE. Will ramp that up? Can they 10x the money that's been delivered? And the fact you've got the loans program going on at the moment, and money going direct to these companies domestically, the supply chain companies domestically, well, you're already in there. And the US is already a kind of investor, US government. What's the next step? So long-term benefit, geopolitics is in, and it's here to stay.
All right. And I also wanted to get your thoughts on Europe, which is also soon to release its Critical Raw Materials Act. Now, we know that Europe has little domestic lithium mining, but there's been a lot of moves from Asian companies in the battery manufacturing side. Do you expect Europe also to start pushing back these investments? And I guess my question is, where do you think the industry will get the financing and the know-how to grow? Will it come from the financing from the government? Will they be involved so much?
Yeah, Europe, I mean, you've got a lot more, it's actually not a lot more gigafactories being planned than the US. It was a year ago, and actually it's kind of on par. But there's a lot of new battery makers that are popping up in Europe and are backed with billions of dollars, right? So billions of euros. So that's a start. And the fact that the European Union plus Germany, France, primarily Germany and France as a countries, and then European Union as a union are driving this. You've got like a dual force at the moment that's kind of pushing this thematic. But the startling fact is like, well, what's in the pipeline for European sort of lithium production, European graphite, nickel, cobalt, manganese? Not much and nowhere near enough, right? And so the other question I've got is if anyone's building a battery plant, do they have raw material contracts? Everyone's building a lithium refinery, do they have the raw material supply secured? And will they in the next sort of 2 years, right? Look forward looking. If you haven't locked up, much like the OEMs, if you haven't locked up the supply chain, if you're not owning the assets or have rock solid contracts, really owning the assets is a thing, then the European downstream users are in the same position as OEMs in America. They don't have anything. If you haven't got the mining or the raw materials, you don't have anything. And you better lock it up as soon as you can because the competition's rising globally.
All right, and my last question for you today is, if you had to make some predictions about what 2023 will look like for this industry, what trends do you see in the lithium battery space going forward?
Trends. Geopolitics to increase. I think that's going to become more and more important. I think, the Gigafactory is going to be a center point, a flashpoint for governments. If you think about, a Gigafactory, is the big battery makers are primarily Korean, Japanese, or Chinese. So if what happens if a Chinese battery maker wants to establish a gigafactory in the USA? Is that possible? What are the politics surrounding that? And then everything that flows from there. So I think that geopolitics rising is one. I think we're going to have some issues with the market overheating a little bit. You know, it's been since COVID, it's kind of gone through the roof, and I don't mean like the trend and direction sort of not pointing directly up towards the sky. I just mean you're gonna, let's say the top 10% of this EV boom won't make it. Maybe that's 2023, 24. I think there's a little bit of a reality will set in because a lot of these companies have been trying to raise money for now and I think that kind of like sort of like cooling down a little bit from the top end is probably going to happen and may start next year. At the same time, you have this raw material disconnect that's growing. So whilst this excitement might calm a little bit, the gap between supply and demand of all these raw materials is increasing. So it's a real kind of mixed story, right? It's almost illogical with what's happening, and that's why excitement should never drive a market. Sort of reality and fundamentals should drive a market.
Yeah. Thank you so much for joining me today.
Thank you very much, Priscilla. Enjoyed it.